high can gold go from here, though? Joining us is Ryan McIntyre, managing partner at Sprott, a $25 billion metals fund. Ryan, thanks for being here. So gold now down about 2% after that recent surge earlier. Where do you see gold going from here? Do you think that it reached a near-term peak and it's over, or do you see enough of a catalyst to propel it higher from that $2,100 level?
Yeah, I guess the short answer, over the long term, I definitely see it higher. I mean, you see a lot of the factors in terms of huge fiscal deficits, big debt in the United States. So I think long term, the gold picture is very positive. Short term, there's going to be some volatility. But I think when you've got a bit of a slowing economy, people are already seeing and suggesting that lower rates will be coming down in the near term, and that should be supportive of gold for sure in the near term.
What do you attribute this recent surge to? I've seen everything from geopolitical uncertainty, the dollar moves, lower interest rate. Jim Bianco actually saying in a tweet today that we have, quote, so financialized gold via futures, options, ETFs, and other such derivatives that it has turned into another fiat currency. His point is basically that gold goes up whenever the dollar goes down, as opposed to other factors such as inflation, war, crises, pandemics. Do you agree with that?
I think I agree with some of that. I think the big things that have come to pass recently are the heightened geopolitical risk, for sure, and also the slowing down of the perceived sort of slowing down the economy in terms of inflation. And inflation obviously is a big driver of rates in the short term, and I think that is definitely supportive of gold anytime the Fed is maybe considering pausing or even maybe lowering rates.
Ryan, you mentioned a bunch of the factors that tend to maybe make people feel better or worse about owning gold, although over time it's hard to really draw the tight correlations between federal deficits or inflation or things like that. One argument that, aside from real rates, that might be a driver is, do people feel as if central banks have it in control or not? And it seems as if maybe right now, if we're going to be orchestrating something close to a soft landing, we don't know if that's the case, but the Fed seems like it's where it wants to be in policy-wise, and the markets and the economy seem to be responding okay to it. Is that negative for gold?
Yeah, it's interesting. I think you hit the duality of it and why people are so uncertain about the environment, because I think in the short term, people don't really have much of a view of kind of where things are going, and gold is really tethered to what the Fed is thinking over the next couple months. But I think over the long term, I think it is very safe to say that gold should be doing very well, just given the huge, again, deficits that we're currently running, and frankly will be increasing as rates go higher, as rates kind of have come higher over the last couple of years. And I think when people look at the trajectory of the fiscal picture of the United States, I think people should be worried. I think we're going to get more into worrying about more maybe sovereign risk coming into the picture than there has been certainly in the last several decades.
What's happening to the cost of production right now, and how do you think that's impacting the longer-term playbook regarding gold?
Yeah, so I actually think costs have started to stabilize. And in some instances, you can actually see maybe some slight decreases. Obviously, you had Walmart talk recently about maybe some deflation coming in. And what's great about that is, I think for the gold perspective, that should obviously put some pressure on the Fed to maybe lower rates. And the other interesting aspect that we've had, which has never happened since data recorded history in the United States, is actually money supply shrinking year over year. And so money supply year over year is down 3%, and that's never gone below zero before. And so people should be a little more concerned about that. And I would not be surprised at all if the Fed started amping up, in terms of their dovishness going forward.
Yeah, you bring up a good point as well as the sovereign risk there. I'm just curious, before we let you go, how your portfolio is positioned with regard to this recent rally in gold.
Yeah, well, at Sprott, we believe that people should have about 10% of their portfolio in physical gold. And we focus a lot on that with our clients here. And we've got a bunch of physical products. We do all kinds of precious metals things, energy transition stuff. So I think it is good to have in your portfolio as a bit of insurance against some of the other things you might have in your portfolio.